I hope you're having a nice day. So today we're gonna do a data release, and I'm again here. So this is the second time for me. So don't be that judgmental. I will try to do my best. So today we're gonna talk about the UK's CPI data, which is quite interesting and one of the most important economic indicators out there. So this CPI index is released every month, and it maps the change in the price of goods and services charged to consumers. So as I have already said, so analysts consider CPI one of the most important economic indicators. This is because of the fact that an unexpected reading can quickly affect the direction of the cable and other pound crosses as well. So generally, high reading is seen to be positive or the pound, while a low reading is negative. So today we're going to find out whether it works in reality as well. So CPI fell to the BOE's the reading slowed from a rate of 2.9% from last year, and the increase fell over 4 years. So the March and the participants had thus the first at 1.7, and this even lower the BOE's 2% target. And if it's true, then this would actually push the indicator to its lowest reading since October 2009. And it's going to be the 6th monthly slowdown in a row. So also economists believe that the inflation is the targeted coming months, and that it also is pressure on the timing of any eventual rise in interest rates from the historic low of 0.5%. I also would like to share with you some opinions of leading experts however, also, yeah, well, not only actually opinion that I would like to share with you. To participate, you just have to click right on this banner and log in and join this contest and win some money as well. So here you you also can see what impact our community members have in our, including Independence Day 32, bearish outlook, and the fiery hooks.
Everyone, yes, so I'll do today on the Great Britain pound Swiss franc. Main reason for that is because Great Britain pound United States dollar will be done by Alexander, so I didn't really have much choice in currencies, right? But on a more serious note, it was actually the one which gave the market sentiment results for the medium to longer term, right? This was screenshot, didn't need that. So what you're seeing at the moment is Great Britain pound Swiss franc 1 minute chart. You can see it's being rather volatile, so possible positive surprise trading strategy would go for entering the position at the current market price. At that point, I would say these dips below the 200 bar simple moving average right over here would be favorable for that. Also, let me maybe a little bit zoom out, and you'll see that we're seeing actually a rather huge gap between the closest major support and resistance levels. So the daily high and daily low are ones being out for that. Even let's say at this point, if we have rather let's see if the currency pair remains at the on 1.4533, maybe 34, easily put the take profit at around the daily and weekly pivot points at around 1.4560, right over here. And in such case, we would have a possible gain of 5 pips. And if the daily low still will be used as stop loss, a possible loss of 15 pips. So yeah, just I guess to generalize, if the pair dips below the 200 bar simple moving average, we could leave the take profit and stop loss at the daily high, the daily low. If it remains at the current market price, meaning below the daily high but above the 200 bar simple moving average, we could move the stop loss at the 200 bar simple moving average and put the take profit at the daily pivot point, weekly pivot point. Right, so the reasons why I chose this currency pair actually are rather pretty straightforward. Current market sentiment is strongly bullish. Although 50% of pending orders, 50 pips around the current market set to go long, so 50% set to go short. However, this in a sense speaks that we should see additional, even higher levels of volatility and more substantial movements when the data came out in 110 pip range, and sorry for the typo, in 170 minutes of pending orders. In case in the level a substantial levels of volatility, the pair will be pushed higher, and yeah, the general idea is that Swiss franc across the board is being sold in 74% of the cases, and in my opinion, a little bit maybe taken away from the market research. Other products, I would say that's mainly due to the referendum votes on the quotas, etc. So I'm pretty sure this Swiss franc should be actually, being hit by that rather severe. If we take it into the technical analysis, technical indicators, you can see a good thing, I would say, well, not good thing, well, rather clear thing is we do not see a consensus on the indicators. However, at the same time, the RSI and the stochastic do not indicate the pair being overbought. So, in general, I could say that a good outlook, and it will therefore, but in the same time, we do not get any additional support or any additional resistance. We shouldn't get any additional support or resistance during the release of the data, which in a sense is beneficial as well, and which should be a clear and pure reaction. And I guess Alexander will be printing the table on the recent reactions, the minimum and the highs and lows. You can see that recently Great Britain pound was trying before that, let's see, some 3-4 months ago, showed the reactions of 20 to 25 pips, but these 2 months it was up to 10 pips. Therefore, how the data coming from Great Britain as the CPI, it might be that actually we will see additional and elevated level of volatility and much reaction than usual. I guess that is all what I want to say, and for this snapshot of the current market on the whiteboard, don't forget to with the trading strategy for a next focus on Great Britain pound, United States dollar. Alexander, the floor is all yours.
Thank you, Thomas. Yes, hello everyone. And today, as Thomas already mentioned, I'll be speaking about the negative price trading strategy, as well as I will have a look at it on the table. So, actually, the pair has a great potential to be highly volatile today. Let's start with the historic data. So I would love to, you can see that initial market dropped 30 pips, and we see that during all initial data surprised markets to the downside. Actually, as we'll see, it's working at 1.6, even though markets can fluctuate even in a wider range. For example, if 1.8 or like forecast, then the initial market correction will most likely drop 30 pips, and therefore just 21 pips from the market price. And actually that will be a recent low. So let's switch to the recent low as well as weekly support. So quite a substantial support level for short traders, and therefore the pair will most likely experience some difficulties around this level. And once again, the potential take profit can be placed around 164.65, and as always, the entrance point at the market, which is currently 64.85, just slightly above 4-hour support. Regarding the stop loss, as we suggested, markets will be highly volatile. Then we suggest placing it around. So yes, that would be too much risk, and as you can see, the pair has been highly volatile already, and it was fluctuating in a 20 pips range. So yes, we need to adjust our loss, and yeah, we recommend placing it around 100 minutes simple moving average, and for our pivot of 164.93. So just so plus 160, and that will be only 7% market price, so not a very risky project. And yeah, as we assume that data will to the downside, we will have to have the sentiment with % of traders holding short positions. Meanwhile, the 1% of all cases across the board, while attitudes towards the wingback is bullish, with more than 6% of open positions on the USD crosses. At the same time, we see that slight majority of pending orders in the 50 and 100 pips by the pair, meaning that in the longer term, traders still have a bullish view on the. And once again, regarding the market sentiment provided by Adam minutes before the news release, and the data is already out, so we see that it's completely in line with 1.7% of on a yearly basis. Meanwhile, monthly inflation was 0%, so that's an improvement of 1.6%, and it's picked up to 1.7%. Yep, and the initial market reaction was so 18 pips, so actually expected. And obviously the pair has penetrated our stop loss. Yep, the sterling and Swiss franc currency pair has penetrated high, recommended stake profit, and with the initial market reaction, just 12 pips. But switching back to the table, so we see that technical indicators on the weekly and monthly chart are a signal, meaning that they bullish scenario in the long term. And so to conclude, a weekly chart an ascending triangle, which is like this apex as April 21. Yes, April 21. The pair will penetrate the upper or lower, and we see that recently the pair has already performed a throwback, which usually sets the bear area. However, once again, taking into account extremely positive data from the UK as well as technical indicators and pandemic orders, the outlook for the bear is bullish, and therefore the bear, I guess, in the longer term will be able to reach a recent high and a weaker resistance, which is at 168.23. So still quite, and to be more precise, it's 300 in the longer term perspective. The outlook for the pair once again bullish. I guess pretty much from my side. Hope that was useful for some of you, and we will back to you, Eugene.
Thank you, guys. Thank you so much. Well done. Great job. So 1.7 in line with the forecast. So no unexpected surprises there. So anyway, thank you so much once again for your time and your attention. Feel free to contact us in case of any further questions or more details, information, whatever you wish. Meanwhile, have a nice day, and we'll continue with our webinar with Louis. Hopefully he will join us soon. So